best performing suburb in Murray Bridge, which is pretty crazy to look at these results, is Murray Bridge East. How much do you reckon it grew by?
Wouldn't have a clue.
64%.
Holy shit. Is it time to give up on the Australian property market? Frank, in today's podcast, we're going to be touching on the best performing markets from an LGA perspective of 2025 and whether or not we should do the same next year and if there's going to be any bangers next year or if it's going to be another stinker next year. Let's rock and roll. I'm excited for this episode.
So top 10 best performing regions in the country. And little golden nugget, or not golden nugget, I'll say, we're going to do the next episode in 2026, the first one that we do release, is going to be the best performing regions, top 10 best performing regions for capital cities and regional towns.
Of 2026?
Yes, but that's going to be the first episode for 2026.
You're going to announce it?
Yes, we are.
Holy shit. Okay.
All right. So
but today, what's the episode on?
The best performing for 2025.
Okay.
We're going to start at 10 and work our way up. Mm-hmm. Okay. Out of the 10, we're invested in 6 of these regions.
That's not a bad idea.
And out of the 10, I think there was 3 that we were going to invest in, and we kind of pulled the pin, and I'll kind of walk through why and what's going on. And some of them I do. There's a little bit of maybe a regret there as well of saying, oh, maybe we should have, compromised or looked at things a little bit differently. But we'll touch on those things. I always like to be transparent.
That's good. I like that. It's not always
well.
perfect. And you as an investor, especially being the head of the research team, it's nice to hear that, could have potentially done something different. I'd be interested to see if you change that in 2026.
Correct, yeah.
That'd be cool.
I definitely have. So I looked at things a little bit differently. I think there's some influences where you take on board that probably aren't the right influence, and that's, steered me away from these regions. And some of them actually, at the time, it was just very, very hard to move in that region because it was very, very hot as well. And that was, one reason why we just didn't buy there too. So I'll touch on that, but it's actually good. It's good to see these locations have done well, and what I was looking at was the right thing, just that we just didn't make the move in there. So the only downfall is that we didn't buy and achieve the capital growth. It wasn't one of those things where we bought and went backwards in value. So we know we're looking at the right data, which is great.
Of course. All right. Well, let's rock and roll. Let's get into number 10. Maybe before we do, there was a lot of doom and gloom at the start of the year. The property market was going to crash. Very interesting.
Doom and gloom. Yeah, there was talks of maybe rates even going up. There was rates of, the talks of going down, which they did, and the market was going to in a bubble. There's always talks about, something going on.
I wonder if that's going to happen next year.
Oh, well, I think all the idiots out there that keep saying it, maybe they should lose their jobs because they don't know what they're talking about.
I agree. It's
like a stock market. There's always a company doing well. There's always a company doing not so well at the same time. So if people want to, buy into the bullshit of there's a bubble, GFC happened, those markets that went well, those markets that didn't do well. Recession happened in the 90s, markets did well, markets didn't do well. So it's all a bunch of baloney. So the only important thing is the people that are listening to this, just to go do their own research and just understand how the property market works, because otherwise they will not get deterred making a decision.
Yep.
How many people that we speak to this year, I reckon, that didn't want to invest because scared of whatever reason was. It's just they've cost themselves a lot
hundreds of thousands of dollars, if not millions.
So right, let's get into it. Number 10, Western Downs. Okay. Ooh. Western Downs, they got some of the big regions or suburbs in there. We've got Dalby, Chinchilla, there's Miles. They're the big cities in the Western Downs. And Western Downs is more inland from Toowoomba. Okay. So in Queensland. Median house price is $425,000 and the rent is $500 per week. So it's 6.12% rent. Yeah. Market grew by 21.4%.
That's number 10.
That's
awesome.
21.
That is cracker.
For the region. Now, if you look at Dalby, 23%, Miles, 21, Chinchilla, 19.
Awesome.
Now, this is a market. I remember we're putting an offer in. We're going to buy property in Chinchilla. We won the property. We agreed on a price with the agent. And I remember sitting there and I was like, oh, I don't know if we should go for this market. And the reason why I was a bit scared was just because the population size wasn't as big as, or as strong as compared to Toowoomba or all these other places that we invested in. I think the LGA level was around that 10, 15,000 people, maybe a little bit more. Cool. But in the suburb there of Chinchilla is very small. I think it's below 10,000. So, you're a bit scared, a bit cautious about those things. You hear all these things. You need a big population, otherwise the market's not going to do well. And I've spoken about this before, and I think from an LGA level, it's around that 10 to 20,000 people we look as a minimum from an LGA, not a suburb. And then from a suburb level, we've gone in places with 8,000 people these days that have a small suburb level of population. So I think I've learned a lot from that, and that market's done extremely well since then.
We bought a lot of assets in that particular pocket, or no?
We're looking at to make our stance in there, and that's when we were going to buy the first one. And I said to Ryan, let's just go to Gladstone, or at the time, this is 2 years ago, let's just go to Gladstone, let's just go to Townsville. So we just walked away from it. But it's done extremely well over the last 2 years anyway. So it's done 21% this year from an LGA level. As you can see, some of the suburbs have done over 20%. But as well, even the year before that, done really well.
It's done really well. So I guess then, to be deterred, your thought process was it's a bit too small of a population. There may have been some outside noise to say, hey, that's too much of a risk to go in there.
Yep.
And you pulled the pin on it and did not buy there.
Yeah, I did not buy there.
Gotcha.
So
regret?
Look, it's not a regret because we had better I wouldn't say better locations. Gladstone and the other places that we're buying, Townsville, I would say yes, they are better.
Yes.
They are better locations. They have performed better, but it's it was a great market that was very affordable. It's actually more affordable at the time than the other locations.
Absolutely.
So that's why you could have got in for a smaller price point.
Cool.
There's a lot of things going on from projects and things. So anyway, we live and learn.
Awesome. Next one.
Number 9, Murray Bridge, 21.7%.
Huge.
Okay, from LGA perspective, you got the suburbs there of Murray Bridge East, Swamport, etc. The best performing suburb in Murray Bridge, which is pretty crazy to look at these results, is Murray Bridge East. How much do you reckon it grew by?
Wouldn't have a clue.
64%.
Holy shit.
64%. There was some of the other, Swamport, 33.
Where's Murray Bridge?
Murray Bridge is in Adelaide, or sorry, not Adelaide, I should say, in South Australia.
Yep.
Okay. It's, it's on the right side of Adelaide. Okay. And it's just I guess an LGA that's just been performing for so long. I think 2021, 2022, we're looking at buying in there. There's just no stock. It was just hot, no stock. Another market that we're looking in, trying to get into, was just very hard to move in. Offers we're putting on straight away. You had to really, work hard to get that stock. And it's done extremely well. The medium house price is $560,000 for the LGA.
Now.
Yep, for the LGA. And $480 per week in rent, which is a 4.4% rental yield. Yep. So rental yields have, been squeezed because of prices are growing faster than the rents in that area. But it's been a really, really good market, consistent over I reckon it's one of the consistent markets over the last 5 years.
When did we bought assets there?
No, we haven't bought. 2022, we're looking in getting into that market. It was just hard to buy into that market. Just to break in, just couldn't break in to a point where it was like, you're fighting with a lot of other people as well. Prices were going, the stock levels weren't there, and the quality of the stock at times was very sporadic.
Yep.
So we just wanted to move quicker, and during that time, I think we're buying a lot in Rockhampton. So we moved to Rockhampton instead. It was just a little bit easier to move in.
Cool.
So
still hot now?
Still hot now, yeah, 21% growth.
I understand from a growth perspective, but still hotly contested now, or no?
Yeah, I guess so. I think there's a few people floating around. I haven't gone in there to see who's still buying or call up agents, but it's from the data and what's going on and the projects that's going on. It's a strong market.
Things moving quick?
It's still moving. The days on market is still quite low.
Okay.
Yeah. Okay. Not as low as what they used to be. I would say that they're slowed down a lot, but it's still a great market.
Okay.
Moving in that direction.
I want this to continue because you've now said 2 of the 10. Didn't invest in. Let's go to number 8, but then I've got a little question for the viewer here, just to see what they would potentially do. But go for it.
Number 8, Mackay, 22.4%.
Still going.
Medium house price $642,000.
Wow.
The medium rent $670 per week, which is a 5.4% rental yield.
Rents are kept up.
Best performing suburbs: Walkinson 36%, South Mackay 33%, Blacks Beach 31%.
Awesome. We purchased properties here.
Yeah, many properties were purchased here. It's done extremely well. Rental yields are quite high. Very diverse projects galore. Got a lot going on the wharf there and down the beachfront, and then of course all the other projects involved with the hospital and other things as well. So big on tourism and just very diverse now. The economy's changed a lot.
Yep.
A bit of mining, and mining is there as well, but it's not majority of the economy is backed by mining. So has changed a lot over the last 4 or 5 years.
Awesome.
So market's still doing quite well. I think it's I think it's got a bit more to grow as well.
Yeah.
And it's very expensive at the moment. Medium house price 670 or 640, whatever it was I just said. So it's it's still moving in that right direction.
And that doesn't the growth doesn't fall off the face of the earth, right? So it doesn't do 20% this year and then next year does 1%, right? It's like that will just slowly come down, may go similar pattern next year and then start to slow down. Which kind of the point that I wanted to raise there is, people listening to this now, why they should not go and listen to these three regions that you've just said, and I'm sure, they're going to get bigger as you get to number one, and why not just go, let's go and buy there now? Like, why is that actually why would you not go and buy in these regions right now? You're not listing the regions to go into investing. You're listing regions that have been best performers.
Well, a place like Murray Bridge, for example, 2022, you could buy a property for $300,000. Now, the medium house price, let me just go back, 560,000. Okay, so it's jumped. If anything, in some of those suburbs, it's already grown 100%. Murray Bridge, I think last year or the year before, was the best performing market in the country. One of top five. So you've already missed out on all this growth. And as you can see, like you're right, it's not going to go from 20-something% then drop down to 1%. If anything, it was at 30-something% a couple of years ago. So it's dropped from 30, now it's at 21, and it's just going down slowly, and it's going to keep performing. This is growth on year, last 12 months.
Yes.
So that's where it's still continuing that trend. And so you don't want to be buying in a market like this, because all these markets I'm going to now mention, we've bought in Mackay. Okay, it's done extremely well, but you want to keep buying there because it's getting very expensive. Still, rental yields are quite affordable, but you've missed out. Once again, like the same old story, you missed out on all that growth.
Okay, but so like you missed out on the growth, but there's still going to be growth. You've just said that. But what is the actual impact? Or like, why would not? Like, give me the actual reasoning. When will the growth run out? I know there's no crystal ball, but generally, as opposed to going into, I don't know, your Mackay of 2021, right? Like, what is the actual difference there from an investor's perspective?
You've got that 5 to 7 year window where you have that strong growth. So you're just going to miss out on all that other growth that you've potentially already missed out on because it's already happened. So you might
what's that 5 to 7 year? If you just
5 to 7 years is normally a growth phase of that you'll see a market do extremely well with growing in value and having strong growth. And I call strong growth double-digit growth, so 10% or more, and happening over a number of years. You don't want to keep buying there if it's already had that enormous amount of growth, because if you're going to pay 640 or 650,000 for a house in Mackay, well, why don't you go into another market? The medium house price might be at that price, if not a little bit lower, but it hasn't had all those years of growth. So you can actually then say,
it's at the start of its growth phase.
It's its new cycle. Let's get in there, and that market will eventually be whatever $1 million price point in the years to come.
Gotcha. Okay. Awesome. So that's what I was trying to allude to, because there are people that are going to listen to this and go, shit, it's at 20%. Next year it's going to do 20%. Awesome. You're right. You're still going to do better than doing nothing, but it's like you've missed out on 70%. And there are markets at the start where you're going to get the whole upswing and an asset doubling. Right. Cool.
I know other people, I'm not going to mention their names, buyers agents that are buying still in these markets.
Right.
Some of these markets.
Yep.
Especially Mackay. And the next one that I'm going to mention in Bunbury, which is number 7, which grew 23%. So you look at this, Mackay 22%, Bunbury 23%, medium house price in Bunbury $615,000. Okay, $600 per week in rent.
Still buyers agents buying there.
5% rental yield, yes, they are. And
holy shit!
It's been that Bunbury was up there last year with top 3 from my analysis, and I think it's still trending in the right direction. I think it's got a lot of the great lifestyle things that offers that most towns don't have. We've got the nice seaside change, but of course then you got work and you got all the other amenities there as well, and that's done extremely well. I think we've had one of our clients that came on maybe last week. Michael that shared his story.
Yep, 70% growth he's had, 65% growth.
Yeah, exactly. So
in 2 years.
In 2 years. And imagine what the next, the years before that, and then of course the years that have to come, you've kind of already, you probably missed out nearly 100% growth.
Well, because you've got an asset there as well.
Yes. Yeah.
So like he said, I think he had 67% growth in a 2 year. He bought at the start of 2023. We're at the end of 2025. So two and a bit years. What is an asset like that likely to do in percentage? Like, I know you got no crystal ball, but just
5 to 7 year window from what we've seen already, around 100%, I believe. Yeah. So here, that property there, I forgot what we paid for it in the 4s.
440.
Yeah, 440.
It's worth $7.
That will get to close to $900,000 in the next few years.
Gotcha.
Easy.
Gotcha.
Easy. Just because of the scarce, the type of asset that's very scarce, being a
Gotcha.
duplex and being the condition that it's in, it's just a property you never sell and it will never probably go back to where it was when we purchased it.
Gotcha. So, and then just to go back off that 5 to 7, because I want the viewer to understand, right, that we're not saying regions to go and invest in now. We're saying regions that are the best performing over the last 12 months. There's an asset that's going at 700, you could buy an asset in Bunbury for $700,000. That will go still to $900 million, right? You're still going to do well. That's still excellent. It's better than our first few properties of shit properties. But what you're saying is that there's assets right at the start of their growth phase now. So next year, when we do our next one, it'll be, what are assets at $500,000, $600,000 that haven't had 40, 50, 60, 70% growth? Those are the areas that we would be going into as opposed to the Bunburys, the Gladstones, the Mackays and whatnot.
100%.
Cool.
And you just want to diversify your portfolio too, especially if you're someone who's already got properties in these states or same regions. You don't want to put your eggs in one basket and move into another area. Like you're going to reap the reward there too. Like I'll give you an example. Like we've got medium house price is 600 and something thousand now in Bunbury. We'll use Ballarat or Bendigo. Medium house price is around that same price as well. Mm-hmm. But of course, it's at the start of its growth cycle. Okay. And that's always been more of an expensive market than Bunbury.
Yep.
Okay. Now, Bunbury will still perform and do quite well, but I believe Ballarat or Bendigo is going to do extremely well in the years to come as well. And so you're going to see prices, get to that close to that $1 million price point, if not more, maybe down the track. Mm-hmm. And that just doesn't go for them markets. There's other markets around the country as well. So cool. I think you just want to move away from where everyone else is buying and move in where no one else is buying as well. And then eventually that herd mentality will come.
Cool. Love it. Let's go. Number six.
Good old Gladstone.
Gladdy.
23% of growth, $580,000 medium house price, $550 a week in rent, 4.9% rental yield. Okay.
What did you buy your property there for? You got a property there?
$450 I paid.
Yeah.
$450 for my property.
And we bought a lot of assets there, didn't we?
A lot of assets. A lot of damage we did in that area.
A lot
I
of
remember
damage.
2022 we were buying in there and the market was pretty scary. Like started to do well.
Over
2022
period, wasn't it? When it went crazy?
just before. Yeah, so just before Christmas, that was in the mid-year of 2022, it started to take off and then all of a sudden it started to really slow down a lot in the market in 2023. I remember a lot. And if you look at the charts and look at the graph, it's like, okay, you have this growth and then all of a sudden it's going sideways, if not, it was coming down a little bit and sales were going up. So increased volume, which isn't good, of more properties. Mm-hmm. And then, we're just looking at the information, looking at the data, looking at, what's the projects and stuff like that. And then all of a sudden it just shot. And I remember 2023, towards the end of 2023, it started taking off. 2024, it's when it had its big run. 2024, I think it outperformed. I think it done more than 23%.
Crazy.
So it's still
multiple years above.
Still
20%.
doing extremely well. The top performers, you got Gladstone Central, 42%.
Crazy.
Calliope, 35%.
Crazy.
Thames Sound, 31%. Awesome. So just on fire.
Awesome.
Calliope is like a little satellite city out of Gladstone. I remember buying a lot of property there and people were a bit nervous and I was like, there's a new primary school or high school, I think it was, that got built and other things that were going on with projects. You don't build a new primary school or high school. I can't remember if it was primary or high school, but you don't build that in an area that you think there's going to be no demand. So there's a lot of future, strategy behind that by the government there, which was great.
Love it. Gladdy, good old Gladdy.
So we're purchasing Gladdy, as you're aware. I've got a property. No, you haven't got one there.
I haven't got a property there, no.
Number 5, probably people haven't heard this town, but it's called Albany.
Yes.
24.1% in WA.
Got asked about this yesterday, actually.
Yeah.
One of our clients, AJ, he's there right now and he goes, mate, did you guys buy in Albany? So there you go. He's there right now. He goes, this place is firing. It's going crazy.
Yep, on fire. $720,000 medium house price.
Wow.
So very expensive.
This is how far from
from
Perth?
Perth?
40 minutes?
Oh, no. This is long. This is at the very bottom of WA.
Excuse me. Right.
Very bottom. This is like the Esperance.
Right.
And stuff like that. Yeah, it's very, very at the very
What's the
bottom.
region we're buying close to Perth?
Bunbury, Mandurah, Rockingham.
Rockingham's far. I've got a property there.
Rockingham. Mandurah is below Rockingham.
No, close.
Albany. Sorry, you're thinking of Armidale.
Armidale, excuse me.
So you're thinking of Armidale.
That's how much I know about these regions.
There
So there you go.
So the rental yield's 4.3%.
Low.
Okay, so it's quite low, but still quite healthy. We have Collingwood Park, best performer, 65%.
Holy shit.
Middleton Beach, 43% as well, and Mackay, 32%. So as you can see, some massive growth in some of these areas.
Right.
I believe that these markets here have had more growth because when you're looking at these regional towns, like they've all mentioned, even like Gladstone and Mackay and all them, there's all the little suburbs that are far out that are part of the LGA that actually haven't performed that well.
Gotcha.
So if you were to take this to a suburb level, as you can see already, there's markets I've already mentioned that have had 65% growth.
Yeah, madness.
That, like you said, the client that you're speaking to, yes, it's on fire. Great market, very strong, very diverse, and it's actually quite big in population size. I think there's over 40, 50,000 people there. So yeah, it's got a lot of great amenities. The beaches are amazing as well.
WA is a good spot. Buy properties there? Did we buy properties for clients?
We bought a lot of properties there.
Yeah?
Yeah.
Awesome.
So great market.
Awesome.
Number 4.
Shoot.
Copper Coast, South Australia, 24.2%. Okay. Some people might not have heard of this town, of course, but it's a place I was actually looking at, to be honest. And I just, once again, I got kind of scared off, and I was like, I think there might be other places that can do just as well, if not more stable, a little bit more reassurance, I should say. Not more stable, more reassurance in my own self, when I'm just looking at it. And once again, there was population size, the size of the economy, things like that. And you kind of get a bit, be a bit nervous, of course. You're making sure, you want to make sure people's money are getting invested correctly.
Yep.
But it's, median house price is $565, $460 a week in rent, 4.2% rental yield. Okay, so it's done quite well.
Yep. Did not invest there though.
Did not invest there.
Yeah, it's interesting. I think for the viewer as well, so you guys, if you're listening, would notice that you haven't mentioned anything in Victoria, you haven't mentioned anything in Tasmania, you haven't mentioned anything in New South Wales, the 3 states that we're currently in. All you've mentioned is WA, South Australia, and Queensland.
Yep.
And again, I just want to go, but there's a trend, right? Yeah, there's a trend. These are the best performing regions now. We were buying in these regions in 2021, 2022, 2023.
Yep.
So, again, I'm not saying to buy in these regions at all. It's the complete opposite. It's everything that's done when these places blew up. It's, we go back to the region that I just bought a property in, you bought a property in that last year did 3% growth. And now it's starting to skyrocket, right?
Yeah.
The region that we went and visited. Just for the viewer, just to have it in their mind, right?
And so with this town, you look at it and you get a bit taken back, especially on these small towns. And I think the learning and what I've learned is don't knock it because of the size. Don't knock it because people tell you, it has to be a certain size or has to have X, Y, and Z. Anything can happen. And I think you learn from these experiences. And that's what I've learned a lot now. And it's like, okay, I've seen what happened here. This is what I've learned. And this is what I could have achieved. So Warburton, 52%. Okay. That's the best performing, region in that area there. And then you got Camden, 35%, Newtown, 30%. So
it's good that your philosophy is also changing as well, or not changing, but evolving. Because even though, yes, you are the head of research, yes, you've never gotten it wrong, it's nice that you're still, okay, cool, I need to not worry about that population size. And that's what you'll bring into next year, which I think is very, very important, right?
Yeah, definitely.
Everything that we do is because of your research. It's nice that you're like, okay, cool, well, don't worry too much about that. Even if the population is 7,000, 10,000, 18,000, these things can still perform. So it's good.
I learned a lot when we bought in a lot in Bowen.
Yes.
So Bowen's, I think, 10,000, 11,000 people in that suburb.
Right.
It's very small. It's part of the Whitsundays.
Yep.
But if you look at Airlie Beach and all that, it's very far away from Bowen. And that was a decision that I made. And, I remember speaking to a few people like, oh, no, I wouldn't, do it. We're buying property for 320,000 houses. Some cracker houses. I bought my brother a house there. Now that property there, he paid $330 per week. Sorry, $333,000 or it was he paid for the house. Renting out for $580 a week.
Awesome. What's it valued at?
I think it's close to the high fours, going on the fives. So it's done quite well.
60, 70%, yeah.
So and our clients' properties have done extremely well there. Yeah. So, from there I learned, and then we started buying in there. We've bought in some other markets that are, very small markets, and they're doing extremely well today. So, which is good. Number 3.
Ooh.
Get into the big boys.
Big dogs.
25%. Ooh. Townsville.
Still rolling.
Townsville was number 1 last year, so it's dropped down to number 3. There's a few others that have gone past it. Median house price $620, $550 a week in rent, 4.6% rental yield. Okay, West End 40%, which is the best suburb. Pinlock 38%, and then Hyde Park 38% as well. So, and then Heatley, I've got Heatley on here. The reason why I put Heatley, which is number 4, is 30%, which is probably one of the highest crime rates in Townsville.
There you go.
And it's grown 30%.
There you go.
And it's probably done more in the previous years as well.
It's. I think it is also cool though to point out that being a borderless investor and just investing in a Townsville, you're going to get very different results based on actually where you do invest in Townsville, right? So actually understanding the suburbs and why you invest in suburbs, right? Because when you go into a region, you're not going into a region going, we're investing in Townsville, and that's it. You go, we're investing in Townsville, and these are the 10 suburbs that we are open to investing in. Is that correct?
Yeah,
Cool.
definitely. You don't want to be buying in some of these places. I think Heatley at the time, I remember getting a property presented to me for $230,000
To buy, you're saying?
to buy. Yeah, I
Right.
think it was $230,000 or $220,000. It was a duplex.
Right.
Was renting it for like $500 or something bucks a week in rent or more. And the lady goes, listen, I got this property. It's called Boyd's Court. I'm like, yeah. I go, where is she? She goes, Heatley. She goes, it's the most dangerous street in Townsville. I go, oh, okay. She goes, look, yeah, you'll get it rented out. The tenants aren't going to be the best, but it's for $220,000 or whatever it was for $500 a week in rent. You do the numbers, it's over a 10% rental yield, I think.
Massive.
Yeah, it's huge. And I was like, all right, I have a look on Google Map. You see burnouts in the street, graffiti on the road, houses have been graffitied. There was a house that got burnt. It just looked terrible. But
Did you buy it?
no, we didn't buy it, of course not. But it's just a good example to show there's good parts of Heatley as well. And you have a look at what those prices have done. They've already grown, probably 60% since then.
I think it's important. I think it's important to differentiate between the fact that you can't just go into a region and just buy. I mean, you can. You still got. If you bought in Townsville, pretty confident you're going to get 10, 15, 20% growth over the last couple of years for sure. But then there's regions that have done 30 and actually being super, super detailed, super specific with where you're going to buy, that's going to have a massive impact on how much the asset grows, which is very important. But Townsville, do we buy properties there?
Plenty of properties, didn't we?
Hundreds.
It was actually, that's one of my favourite markets.
It is, isn't it? You've always said that.
Always one of my favourite markets. But we move on for number 2, and this is probably even, I know, I've probably got a bit more of a soft spot for this area. Geraldton, 26.4%.
The banger.
Good old Geraldton. So medium house price, $555, $550 a week in rent. Rental yield's a lot higher, 5.1%. Okay. You got Kalua, if you want to pronounce it like that, 47%, best performing suburb. Beachland, 38%, and Sunset Beach, 31%. I know you've got a property
Mount Takula.
What's it? Wagakine.
Wagakine. What's
Wagakine.
Mount Takula? I've got an asset there as well.
Mount Takula as well. That's another suburb there.
Is it?
Yeah.
I've got an asset there.
No, you're going to buy the one. This is it.
That's right, and I took off. Yeah.
Kalua.
Was it?
Yeah, that's the one. You're going to buy in that area. So,
and I pulled out of the contract.
For people listening, Kalua was the best performing suburb in Geraldton, 47% in the last 12 months. You bought probably for like 200
something.
40, no, 50. It was like something.
Pulled out of it because it was too much work.
A lot of work you had to do. And at the time, you're like, you're going to have to spend about 50, maybe to 80 grand. And you're like, but that property today probably would have grown 47% plus your reno would have been maybe 60, 70%.
You live and you learn. I still do buy. Yeah, I bought a property in Wagakine.
You bought it, yeah, because you were going to buy 2.
That's right.
Yeah.
And we'll go against what we preach at Fresh Start, which is never buy 2 properties in the same region. But wouldn't have been a bad year to do it, I'll tell you, because that was last year.
Yeah,
would have had 2 assets, but we bought properties there. Obviously, we bought a lot of assets there.
I bought one there for $470, and that's a beautiful home house in the street. So for 1.1 mil. So as you can see, I can get the value up that high. That property today is worth $800, $850, and it's renting out for $750 a week in rent.
Your asset?
Yeah.
Holy shit.
So I paid $470 and it's renting out for $750 a week in rent. It's doing well.
And what's it worth?
$850, yeah.
Wow.
Yeah, it's a nice home. I got pretty lucky, to be honest.
Yeah?
I bought it. Yeah, it's got a double driveway, got a double car garage on one side. The other side is double driveway, and it goes all the way to the back with a massive carport. That's in Wandina.
Okay, Wandina, yeah.
Not far from the beach, 200 metres.
Yeah, beautiful.
So, yeah, never sell that asset.
No?
Nah, never will.
Live in it.
Love to, or it can be nice.
Yeah, go down to
down
WA.
But Geraldton's very diverse, 40,000 people or 40-something thousand people. It's got not mining, it's not a mining town. People think it's mining, it's nowhere near the mining town. Majority of its money comes from different parts of different sectors, from healthcare is massive there, distribution centre, from retail trades and stuff. The port is the biggest port up north in WA. So, Perth's port's the biggest, and it's actually Geraldton. So that brings a lot of goods and services and feeds all the northern part of Western Australia. And as well, we've got mining, a bit of mining, gold and stuff like that. Iron ore up north. So great market. I think that market is going to be one of the best going next year as well. I think it'll still be in the top 10. Same with Townsville. I think it'll still be in the top 10 by next year, potentially.
Love it.
Yeah.
I love it. What's number one?
Number one, drum roll. Port Perry, 28%. Medium house price, $322,000.
There you go.
$390 a week in rent, 6.3% rental yield. Very high rental yield. Port Perry South, 31%. Port Perry West, 30%. Solomon Town, 25%.
Where the heck is Port Perry?
Port Perry, south of Adelaide. It's a town that is a mine. It's got mining base. Okay, so big on mining. It's got other industries that are driving it as well. I did look into this area, and then I was like, once again, I just put it to the risk reward. I think it's an area I probably could have, I looked at it and go, hey, would I've gone back and tried to buy there? I think for some people, yes, but that have a very experienced property portfolio.
Sophisticated.
They've already got 4, 5, 6 properties, and you take that risk and go in there. And that's something for me, or us, we could do the same thing. Can you still buy there? Do you think it's still a good time to buy there? And then I know that's going to be your next question. I'll be like, I think price it like that, of course, that's a medium price. When you go to the suburb level, it's going to be a lot more than that. So when you go inside Port Perry or Port Perry South, etc., it's going to be a lot higher than that. Because
what do you mean a lot higher? 450s, 400s?
320, yeah, because 320 is the LGA. Once again, there's a lot of little suburbs that are going to affect that price. So it's still doing quite well. It's got a strong economy. Just once again, you get a bit worried about, is there better places that have a bit more security when it comes to industries? So, and that's some of the things I look at. And I've given a flick to Whyalla was one of them.
Yeah,
which
I remember.
in South Australia, which is, you could say north of Adelaide or up the coast of north of Adelaide, and that's near past Port Augusta and stuff like that. 38% of its economy was held up by mining, and then the other part of that as well was by manufacturing, which I think was like a 10 or 20% of it as well came from manufacturing, which came from the mining, because the mining was a steel.
Gotcha. So something happens in mining, you're fucked.
So all the jobs were coming from mining and the steel fabricators / manufacturing. So like you just look at the risk to reward is too high.
Gotcha. Okay.
And I don't think Port Perry's like that. I think it's a more stronger, stable place.
Okay.
But it's just one of those things you take into consideration. It's like, okay, I've got a few properties under my belt. I can take on a bit of risk, great rental returns, going to still get great growth.
Yep.
It's like, okay, well, will the market do the same thing as last time where it went retracted? It's always a gambling game.
Okay. When you're playing that game, it's a gambling game. So you don't regret that one. You're pretty comfortable that you made the right call on that.
I'm pretty comfortable with that one.
Even though it came in number one.
Came in number one, yep. Because I think there's this, once again, some of the suburbs done 30-something%. If you look at where we bought in Geraldton, Gladstone, Mackay, Albany.
They've done similar. There's just a lot more stability to those markets.
Yeah.
Cool.
So
that's the top 10.
Top 10 for 2025.
And you were in 6 of them. You feel pretty proud now looking back at that?
Yeah, of course. I think it's a great achievement. I think it's good that I looked at every single one of these markets on this list. Mm-hmm. I didn't put this in my own priority. I get this data from where we use our data source. Mm-hmm. I put in as well a minimum of 10,000. I think it was 15,000 in the LGA.
Okay.
So there was other LGAs that were much higher than this.
Gotcha.
But I didn't factor in because they're very, very small rural towns that just don't have any stability. It's just like, if a few houses get sold, of course, it's going to skyrocket the price.
Nuts. Yep.
So I look at this and I go, okay, well, what I'm looking at is correct. Okay. Can I do better? And the answer is always yes. Always. So now I incorporated this at the start of the year. It was like, okay, I looked at all these things. It's like, what can we do? And now we're investing in markets that we probably would go back 2-3 years ago and be like, no, we wouldn't invest there. And some of those places that we're buying and have populations small of 9,000 or 7,000 people in the suburb.
Right.
Which we'll probably touch on that in the next episode of some of these areas that we're investing in. I'm going to reveal a lot of these places that.
So you're actually going to reveal. That's what I was genuinely.
I'm not going to say where we're buying. I'm just going to mention them.
Okay.
And the reason why I say that is because people are going to gravitate and want to invest, and they take this as gospel, or they get this advice and they want to buy there themselves. That's fine. I'm all happy for someone to do that. I just want to be the influence of someone saying, Frank told me invest here because if Frank's buying here, we're going to buy there.
Yeah.
And that they, if something goes wrong, it's on them. Well, it's on them,
but it's
not
on financial advice. Speak to your qualified accountant, broker, buyer's agent. We cannot give that advice. That is excellent. Okay, awesome. I love it. We're going to see similar price growth next year. Is there still going to be properties that still do 20% or 10% more? Surely not. The bubble has to burst.
I think there's going to be places that do better, to be honest.
Yeah, okay.
I think they'll be in the 30s. I think there's places in the city, in some capital cities, are going to do 20+%.
Okay.
Which is going to be pretty interesting. There's already seen a few suburbs in Victoria. They've already done that. Not many places in the city of Melbourne that have already done 20%.
Wow.
You hear
This year,
it's,
you're
it's
saying.
quite interesting. I know a lot of family, friends, and my wife's side. A lot of them are builders, and they all say the market's stuffed, and they're all builders and developers. And developers don't see what we see.
Of course,
it's like, and people don't see that. What we're looking at is prices moving all over the country in certain pockets, and they only see what they see in their own bubble in their own suburb. But the developers come in after. Like if you look at Townsville, you look at Geraldton, you look at all these places, even Gladstone, the building approvals now have jumped up dramatically from all the previous years when we were buying there. And that's because they see what's going on, and it's a herd mentality.
Of course.
Developers they don't look at the stuff we're looking at. They're looking at, I don't know what they're looking at. They're looking at other things. And all of a sudden they see it's like, oh yeah, we looked on, realestate.com and it's jumped up 30-something% and it's moving. Let's start building there. And that's what happens. And then you start to see those markets slow down because it's the saturation of properties that will come into the market in some of these areas. There's a lot of land. There's a lot of vacant land around Geraldton and Townsville and all these places, like it's a town, but of course there's still rural towns. It's like Melbourne. You go out on the outskirts, Wollert, Melton and all them. There's heaps of building approvals going on. So I think they don't see what we see, and they come in and then they, of course they saturate the market. Does that mean you should sell? Maybe not. I don't know. I'm a believer of holding my properties because you're not going to buy them for what we paid for.
Yeah, I'm with you. Starting to get a lot of offers on some of my assets now. I will say that. Geraldton got an offer. Michael, who was here last week, was saying Bunbury got an offer on that. So a lot of people coming in now wanting to buy. But awesome episode. It's been an awesome year of podcasts. I think we're at, I don't even know, Carl and I were talking about it before, episode 80. So we're almost coming up to episode 100. Next year, I'm looking forward to getting some cool guests on. Looking forward to the next episode as well, the 2026 one. That's going to be a banger.
That's going to be a banger.
I'm looking forward to that and seeing.
We're going to go. We're going to reveal it all. The best places, I think.
Not where we're buying.
There'll be places where we're buying. Yeah, definitely.
But you're not going to say that we're buying them.
No, I'm just going to just rail them off, and people can
do what they want.
Do what they want with it. Do your own research. It's going to be I'm going to do capital cities, 10 capital cities, 10 regional towns.
It's going to be a banger.
So it might be a bit longer than usual, but a lot of value there.
And it may be in the new office. In the new podcast room.
Yes, definitely.
So big things happening. Thank you guys for your support this year. We're looking forward to a much, much bigger 2026. And thank you, Frank, for hosting every single episode. If it wasn't for you and for the great man Carl behind the screen, this podcast would not be alive. So thank you to the both of you.
Definitely. Thank you to everyone.
Look forward to a massive 2026.
We look forward to it. Thank you again, guys.
Thank you.